Yesterday, Cute was halted by Jerome Powell. Trump and China have made a deal. So shouldn't we be heading to the moon now? That's exactly what we're talking about today. But first, let's quickly talk about the charts, because I know for sure that all the YouTubers today will only be talking about this Jerome Powell topic and so on. I'll just tease it here briefly and we'll talk about it for a moment because there just aren't that many news topics, but personally I don't need to talk about it for 5 hours. The other YouTubers will manage that just fine. Let me put it this way, from a technical analysis perspective, we're still not in a great position, even though these are positive developments. We're at $110,000, and yesterday, before the speech, we dumped again. And in the end, it just dumped like that. There wasn't really a big reason for it. It was simply speculation. We dumped, the market makers pushed us down. But we've also cleared out a lot of liquidity here. So looking at the heat map here, we can see that we've really cleared out most of it now. There's still quite a bit of liquidity up here though. That would be interesting again. Basically, you have to say that from a technical analysis perspective, things look relatively good in the short term because to me, it looks like a trend channel. We're consistently making higher highs here and also higher lows here. That means step by step, we're building ourselves up here. We also haven't dropped down here. If we had dropped below here, that would have been bad, but that didn't happen. So in the short term, things look relatively good, and I still tend to think that we can go up. But whether that will happen in October or not until the end of November, I can't say right now. In my opinion, the worst case scenario would be around $100,000 if we drop down there. But I can't really imagine it going much lower than that. So no matter what happens next, in my view, as I said, this is just my personal opinion. The lowest we could see in the short term would be just under $100,000. But then we would rise again because here we simply have massive support at the 50 EMA on a weekly basis. Nevertheless, if we look at the longs and shorts, we can see that it would currently be much more interesting for the market makers if we were to rise again, because if we go up, a lot of shorts would get liquidated, 3 times as many as if we were to keep falling. This means that things are currently out of balance for the market makers, and it would make more sense for us to rise because then we would liquidate more shorts, since most people are currently short. Accordingly, I also tend to think that in the short term, we will go up first. But even in the long term, a lot has happened since yesterday because now we have Jerome Powell's speech and the deal with Trump. What you have to say about that is Jerome Powell remained relatively calm yesterday. He simply didn't want to set expectations too high because even regarding interest rates, he said it's not guaranteed that we'll see a rate cut in December. Since then, we've also seen that expectations for rate cuts have gone down a bit, now only at 70%. But to be honest, friends, I still tend to think that we will see the rate cut. I think he just didn't want to create unnecessary euphoria here. Inflation continues to be under pressure due to tariffs. However, he only expects short-term effects. As I said, the topic was definitely about tariffs here, but this tariff issue was put on the table today. That means, of course, they're still keeping a close eye on inflation. For the economy, we're expecting growth of 1.6%. Overall, the Fed remains data-driven and is simply watching the labor market and inflation. And as long as that's intact, we'll continue to see further rate cuts. So actually, that's a relatively good sign. We also saw that the S&P 500 dropped in the short term, but then recovered well. Yesterday, some stocks like Google also performed really well because they posted record revenues. I already showed you this at the beginning of the week. This week, a lot of earnings reports from major companies are coming out. Among them were Google, Amazon, Meta, and so on. And overall, Google performed really well there. It's also one of the few stocks I own. But yes, as far as the economy goes, things are looking relatively good. We will probably see interest rate cuts. But he wanted to keep things relaxed for now and didn't want to create any euphoria, which is completely fine. That's why the markets are reacting this way. And the most important thing that was discussed yesterday is that QT is being stopped. This means that the Fed's balance sheet will no longer be used to withdraw money from the markets. Because since 2022, money has been continuously withdrawn from the economy in order to fight inflation using the Fed's balance sheet. This will stop as of December 1st, and with that, we are clearly moving closer to quantitative easing, which would mean a looser monetary policy. We won't get QE starting December 1st, but we're moving in that direction, and that's already a positive sign, because it means that from December 1st and around that time, investors will become more willing to take risks. History simply shows us this, and to relate this back to the charts, at the last 3 FOMC meetings, we saw a drop of 6 to 8% shortly after the meeting, just a few hours or days later, but by the next meeting, we had reached completely new all-time highs. And right now at this very moment, it also appears, or at least it seems, a bit like we're stagnating or not making much progress. But I'm quite sure and I truly believe that in the coming days and weeks, we'll reach even more new all-time highs, which is definitely a good thing, just like the important and significant meeting between Trump and Xi, the president of China. Because as Trump himself said, the outcome is fantastic. The US is lowering tariffs on Chinese imports by 10%, and in return, China is easing its export restrictions on rare earths for a year. Yes, they're also resuming imports of soybeans and so on. In the end, overall, this is a positive outcome. Any deal here is actually good because ultimately we no longer have this uncertainty. The issue is off the table. I mean, you have to realize this was the reason why Bitcoin dropped so much here. And yeah, now it's just been resolved and the whole thing is behind us. Honestly, it was already clear to me beforehand that not much would come of it and that it would be an easy thing to solve. But well, in any case, it's positive that this has already been resolved. Then I wanted to show you this as well. We're seeing increases in the traditional markets, in gold, and in the M2 money supply. And as I've told you over the past few days, Bitcoin is still lagging a bit behind. We'd need a little phase of euphoria, a small push, and then things could get really interesting. And I found this extremely interesting too, because down here we can see the Russell 2000, and every time the Russell 2000 has broken its all-time high, the altcoins have also taken off. That was the case in 2017, in 2021, and right now we're back at the all-time high from 2021 on the Russell. And that could be a bit of a signal for the altcoins. At least we can hope that from here on, the altcoins will also get a piece of the pie again. I'm not saying it's going to be an altcoin season or anything like that, but in the past, it was simply the case that whenever the Russell 2000 broke its all-time high, the altcoin season started. Right now, we're above the all-time high, we've just barely broken through, and there are definitely exciting times ahead of us. The Russell 2000 is ultimately a stock index with 2000 smaller stocks, and when those perform, the altcoin sector usually performs as well. I also find that very, very exciting. But overall, you just have to say that the crypto market is still far behind the traditional markets. We really have quite a bit of catching up to do here. Overall, the floodgates have been opened a bit by the loose monetary policy and everything is moving in the right direction. Things are still looking pretty good for the next few months. If you compare the whole thing to previous years, in my opinion, it looks like this bull run might last a bit longer than usual. How long, I don't know, whether it will last until 2026, but even if it goes until December, then this bull run will already have lasted longer. But so far we simply haven't had any retail investors, no euphoria, no loose monetary policy. It just looks like this 4-year cycle is over and everything is going to stretch out a bit longer. Otherwise, the cycle would be over by now. Honestly, we would have just about reached the time now when, in the past, the cycle ended after the halving. And personally, I tend to think that because the macroeconomy looks that way, we'll definitely have this cycle for a few more months. And here I'm interested in your opinion. Do you think this crypto cycle is over now because of time and data? Or do you also think, like I do, that it's going to last longer because we simply have a macro environment where we're only now seeing loose monetary policy and where stocks and the real economy could really start to flourish in the coming months?